Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Good morning, Thursday, June 14th, 2022. Yesterday wasn't that bad of a day on a high CPI number and whatnot. Today we got PPI that was a little bit elevated, not as bad, but yet we are looking down pretty significantly. B of A came out and went to 3,600 officially on their target for S&P 500. Citing a potential to hit 3,000, 3,200 along the way sort of thing. Not the first ones to make that sort of a call, but the first ones I think to have an official 3,600 year-end target out there. JP Morgan Jimmy Dimon continues to be cautious on the macro, on the forward outlook. Current conditions are fantastic in terms of strength of the consumer, strength of the enterprise, but still very cautious on the forward outlook, canceling the buyback. Taiwan Semi, great results, good guidance. The thing that concerns me, they did warn of inventory buildup at customers potentially impacting their full year forecast. That's just that's not an environment I want to buy semiconductors in, personally. When you get worries about inventories building, and I don't know why they wouldn't in the current environment, it feels like everything's just going to slowly grind to a halt here. As companies sort of hunker down and the consumer probably hunkers down incrementally from current conditions. So it's still a little early for me. Great numbers, great company, but I think potentially one more quarter, maybe before, but not yet, not for me. Oxy, Buffett in there buying another 4.3 million shares yesterday, but yet crude just can't get out of its own way, now looking like 92, I believe, on WTI. The nat gas story still looks better relative. I think nat gas is looking up again this morning. Chesapeake, great day yesterday. I talked about insider buying, I think, yesterday as well on that one. Stock was up huge, I think 8% or so. Antero Resources, AR, another one was up big yesterday. Those, I think, are good candidates if you want to dip your toe back into the E&P space. And the triple Q downtrend breakout comes into play again today. It survived yesterday as we gap below it and traded higher. See if that happens again today. We will see. But yeah, careful out there. And I don't think today's the day to be a hero yet. Have an awesome Thursday. We'll talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefor. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.